Hey there, how's it going, guys? It's a lovely afternoon on a weekend here, and I'm going to come out with a new subject to give you some more information of something that I use regularly in my trading, and this is the volume profile indicator. As usual, the tagline says, knowing more is the step to your trading edge. That's what I believe in. Education is a non-stop process, and you keep on trying to learn what's new, what could be different, and what could give you the trade, what could give you the edge. And remember, unless you have a trading edge in the market, you're not going to make it. So you need to have some edge to be able to do well in the market. So for me, the volume profile indicator has given me a huge edge in understanding where the big buyer, where the big money is sitting, where the smart money is trending, where is the smart money coming in at any given point of time, and where it's resting, and where is the market going to go in the short term. So without saying much, let's get into this video. Welcome back. So as usual in every class, we set the agenda for what we're going to discuss in the slide or in this presentation, and how are we going to progress in this video. So the objective of this class is to provide you with a quick overview of the volume profile to help you see that the market operation is a narrative. It is a developing auction. To help you see inside the bar, a group of bars, and to identify areas that might give you the advantage or the edge. And then we look at some basic setups and then to drill down in order to execute on them. So in the end, that understanding that we have from the structure that we see on the chart, we need to execute to be able to make money from whatever we've understood. So that'll be the gist, and that'll be the pudding of all that we do. And then we'll take a quiz to consolidate these ideas into your mind. So let's do it in the way the agenda is laid out to us. Hey there. So to start with, let us understand what is a volume profile and how is it represented on a chart. So what was a typical volume profile? Well, a volume profile is a histogram placed sideways on the chart, and it represents the volume at a particular given price. So that's how the volume profile looks. If we just can go to a regular chart, what you see here is we're used to seeing volume as printed on the bottom of the chart, telling us what was the volume on a particular day. Now the difference is that we want to now find out what is the volume at a particular price. So that would be the volume profile. So for an example, say I want to find out what is the volume traded at each price point for a period starting here to a period starting here. What this will give me is a profile of what has been the volume. I'll let it happen. Here you go. So this is telling me from July 11th, 2022 to the present day, that is 26th August 2022. In this particular period, at these particular price points, where is the maximum number of trades that happen at a particular price point? Now you don't get that information when the volume bars are placed here, whereas when they're placed horizontally is where you are able to see at which point, which place the price is traded the most. So here you can see that 1.45816 is the place where the maximum number of volume was traded within this period. That gives us an idea as to where the maximum activity for all the traders that happened in a particular period was at what price point. Now this is a very important information that the market tells me, that this is where the price finds balance, and all the major participants in the market, when they trade in this period, have found this price to be the one where they very often want to trade. So this is an equilibrium price where everybody thinks that the market is at a reasonable value, and that's a very important information for me to be able to help me trade, get into trades, because I will trade against the market, and when I know the market is more comfortable to place at a particular price, the market will tend to return to that price. That's the means. The market is going to return to that price very often. So I can suit my trades to play with that information. To give you a little more detail about what the volume profile looks like and what the areas that are more important to look at, well, the value area shown here is in the blue. What it tells us is during that period that we chose as our context, the price traded 70% within that area. That is called the value area. Now how did this value area come to be? Well, there's a concept called standard deviation where a travel from the mean is calculated as a single deviation, and that's 38.6. From 38.6 to 7, it is 34 point something. I'm not too sure, but we round it off to 70% because 34 odd from the mean would make it 68 point something. But to make it a figure that we can understand easily, we made it 70%. That's the normal practice on every volume profile chart that you see. So the blue area that you see here represents 70% of the activity that in the market happened during that period, and then the yellow area is beyond that 70%. So the market tends to revert to its mean, and this is the area where most of the buyers find comfort when they trade in the market for that given period, is what this volume profile tells us. Now this volume profile can be plotted for a month, for a year, for a day, even for an intraday, even for a 10-minute period. So it is, it can be plotted in any chart, and it will give you the same information. Now, what the 70%, I have explained to you the 70% of the area. Now, what is the point of control? The point of control is the point at which the maximum number of trades have happened on a particular node. So in this chart, 85 is the point of control where most of the prices are traded around this price. This is a 4-hour chart. So in a 4-hour chart around this period, this is called the point of control, and this is called the value area high, and this is called the value area low, which you will get to know more in the next chapter. More about it in the next one. Thank you. Having understood how the profile looks and what are its areas of importance, we should now look at just look at volume profile and give it a little overview in terms of how we can use it to understand what the market is doing. So on its own, the volume profile is information, but it has to be used in context of what the market has been doing. So basically what it tells us is that when you see that the market is trending within the value area, is when you see that there is the majority of the buyers and sellers think that at that particular point of time the price for that particular underlying asset is in a fair value situation, where within a range the prices are fluctuating from the top and the bottom of the value area high and to the value area low, and vice versa. There's a small fluctuation because the price has to move because it's an auction, and it will look at the buyer will try to find the highest seller, and the seller will try to sell at the highest point, and the buyer will want to buy at the lowest point. Given that situation, the auction will keep on happening, and if it is within a range, we can say that it is there's a balance in the market. The moment it moves out of the balance area is where there's an imbalance that has been created by the action of a particular player or some players in a group, and that's when the prices begin to trend. So when the prices are sideways, that's the period when it is called that the market is in balance. And when the markets begin to trend and they start moving out of the value area, that's when they begin to trend. So whether it's on the boundaries of the higher value area high or on the balance of the value area low, as they begin to trend on the extremities and go beyond the value area, that's when we say that the price is trending. So typically the moves happen when the prices move away from the value area and they begin to go into another zone where they would then would establish a fair value for that particular price. So again there's a context to that, what you need to look at, because the volume profile will tell you what is happening to the price after you decide a context. So the context is a very important way to judge what the market is doing in conjunction with using the volume profile indicator. Now there's a question, why would you introduce indicators to the chart? Because it only complicates matters. Well, the price chart tells you price action, but that's incomplete information without the momentum that the volume creates in a given situation. So there are two components to any market, which the price, the volume. These are two major components that one needs to look at when one's looking at price action. And one can look at the volume on a particular day, but it makes more sense to look at the volume on a particular point when you want to trade. And that's where volume profile gives you an edge, because it tells you at what point the market is interested to trade in. A day would define a big range on a candle, but within that candle, at what point the major market moves happened is what the volume area will tell you. So it could add to complications, but then if there's ambiguity, when there's ambiguity in your mind, you can take decisions that can go wrong. But when you get more information, that leads to clarity, and the more the information, the more you have the edge when you trade in the market. So not everybody uses the volume profile, but if you use the volume profile and it gives you the points of interest on the market, in the pricing on the market, that gives you an edge, and that's what volume profile offers to you. So I hope I've made you realize that volume profile can help you, given that you understand it and given that you apply a thought to it and use precisely, it can give you an edge in the market. And edge in the market is all that you need to make money. Let's dive into the next one with some examples now. Let's delve into the practical now. So what I have here is a chart of the Bitcoin futures, where this is a 30-minute chart of the Bitcoin futures. So this is an intraday chart, and what I'm trying to establish with this chart is to give you an idea of what I just spoke in the last slide. Well, what we see here is that within these four 30-minute periods, the profile shows us that the point of control began to trend down, and then this is saying that the price is not in balance, and there's a move in the price which is making the price move lower. So the balance areas that you see in the yellow and the blue, they are moving rapidly, and this is where the price, this is called a downtrend, where there's an imbalance in the mind of the participants, that there's no consensus on what the price is going to be. And then we see that at one point of time the prices rose, and then for the next 8-10 bars the prices are in a range where within that range there seems to be some understanding between the buyers and the sellers that at that particular point of time there seems to be some price stability, and that's where we call it as a balanced profile. So intentionally you would not want to trade in a balanced profile, because there is this narrow range within which the market will move, unless you are a trader who will be scalping between the two extremities. And you would want to buy or sell once you're sure that the trend has started, and you would buy low and sell high, or conversely sell high and buy low. So you would want to buy when the price action shows you a trend and the prices move out of the balance area. Similarly, when you want to sell when the prices move out of the value area low and begin to trend to another balance, to another area of balance that could be created later. But the basic understanding is that if it tells you that if it is in a balanced area, you would not want to trade, and when it starts to trend is when it starts to leave the value area, when you begin to think that it is going to trend. Now it can return back into the value area, that's a different thing, but if it begins to move out of the value area, that's an indication that the prices may have begun to trend. So this is the understanding that understanding the volume profile can give you. This is one of the examples of how the volume profile can be used. Let's look at some more examples. So the trading narrative that can be built by seeing the charts, understanding that it's an auction process where it's a combination of a bid and an ask, and the constant endeavor of the market is to match the bid and the ask, and to narrow the gap between the bid and the ask is what the market will ultimately want to do. As the bids keep on going higher, the ask has to follow, and conversely, that's the way the market moves. So the level of participation in terms of the location of where the participation is happening will help you build a narrative as what's the market trying to do, and what is the equilibrium or the balance that the market is trying to find. And that's the structure that can be built by understanding where the market participation in terms of volume was happening and where it was not. So you will see the price move up to a particular point, but then there the market participation drops, and then the price is forced to return back, because if there are buyers who want to buy, but at a particular price, if there are no sellers available, the buyers will have to give up their activity of trying to buy, because they can't just keep on going up and keep on seeking higher prices, because the idea is to buy low, and then if they don't find any sellers, then the market tends to drop. And conversely, when somebody's trying to sell, and if he wants to sell at the highest point, and as he wants to drive the market down by selling, putting a selling pressure, beyond a particular point he will not sell, because if he doesn't find buyers, then he will stop that activity of selling. So that's the bidding auction process that's going on in the market all the time. Now, to read that auction process is the key to understanding the market, but tools like the volume profile help you understand how the bidding process is unfolding in that given period of time, and where the interest of the buyers has been in the historic past, and as it happens is when it's plotted. So it's not a lagging indicator, but it's an indicator that tells you the present. So that's the difference between other indicators and the volume control, the volume profile. It tells you the price in the immediate history, but also it gives you an indication as to where the price is going to find maximum acceptance. So, and then once you understand this, you can apply the if then and else principle of trading, and then use that theory to take trades. So if I see the price moving out of the value area, I will prompt to think that it is going to trend. If it is staying within the area and moving within the range, then I'll understand that the price is consolidating. So this is the trading narrative that the volume profile can help you understand. Now, in the next slides, I'll try to give you examples of how you can use the actual there are different ways of the profile, and I can't explain the entire subject of the volume profile in this slide, but I'm just giving you an overview and a little basic understanding of what the volume profile is. And this basic understanding can be expanded to take it to a further level. That is not the topic of this discussion. The topic of this discussion is to introduce you to the concept of volume profile. So I'm going to give you a brief overview of how the trading activity can happen around once you understand what the volume area is trying to represent to you. So let's take it in the next slide. So before we go into the actual explanations and the setups, let's just take an overview of what we've done until now on this in this slide on the video. So in the volume profile, what are the areas that matter? Like we said, the value area is the one that gives us the immediate understanding, the area of the balance. So that's the value area. The 70% of all the trades that happened is the value area. The extremes are the points of the top and the bottom. In case of the top, the prices trended up, but if they did not find any acceptance or more buyers at this point, then the prices will trend to return back, and that's the extreme where in that area the prices reached an extreme where it did not find any buyers. Similarly, the extremities on the low are the ones where the prices went to that area and they did not find any sellers. So when there's no selling activity, the buyers are in command, and then they would drive the prices up. So these are the case of the extremes on the high and the extremes at the bottom. Now we need to understand what are the nodes. These are the nodes. The blue bars are called the nodes, and the point at which the highest volume happens is called the high value node, and the price at which the lowest activity happened are called the low value nodes. So typically these are the high value nodes and the low value nodes. And what are ledges? Well, in this particular profile you don't see a big ledge, but this is one of the ledges, but this ledge is pretty broad. So I will explain to you about a ledge in the next profile probably that we'll see. So ledges are areas where there's sudden decrease of trade concentration. So the activity the ledge is created when the activity after a particular price suddenly decreases, and there's a sudden rush in the prices away from a particular area, and there's an imbalance which prompts the price to trend higher or lower from a particular area, and that's where you see a ledge formation in the node, and that's what we call the ledge area. And the ledge area is an important area because that's where the supports and resistances are formed. So let's go to the next slide, and we will take an example of a typical volume profile. Now this is a volume profile formed in this particular time context, and we see that the prices began from the bottom, and there was one balance area that was created here, and then there was a sudden spike, which was an imbalance caused by the buyers coming in command of the market and realizing that the value at that particular time is way larger than what it should be, and they cause the price to impact and rise higher, and then the prices tend to make some level of understanding within that period, and the prices consolidate, and then they again begin to move higher. But what has happened here is that there's one value area that was created here, and then subsequently again there was another value area that was created here. Now if you divide this profile into two slots, you will find one value area here, and starting from here to here you will find that there's another value area here. But when you talk about a composite profile, giving you an idea on what the price has been doing in a particular context, you realize that the price has found value. There are some buyers who found that the value was lower, and they started buying aggressively, and they created a rise in the prices, and there was another area where then there was some balance reached, and the sellers decided that there's some area that they could start selling and hope for a lower price, and they started to sell, and then the prices did come down back into that area where there again these people who found value at that point again came into the market, and they drove the prices again higher. So that's how the double distribution happened, and then subsequently the buyers took over and the prices did go higher. This is the understanding of the structure that we see here. Now what are the trade points that we can generate from here? So the first trade point is that after this, at this point when the impulse went up, you may not realize that the activity is going to happen, and you may not buy at this point of time. But when you realize that the price have gone into a higher area, they found some balance, but then they're falling out of that balance, the acceptance of prices are not happening at this point of time, and there are no sellers there, then the price, though no buyers there, then the price tend to fall. But after they fall, where are they going to find value? They're going to find value at this point where there were some buyers who had already created some positions, and there was a point of interest. So those buyers who created an interest at that point of time are going to jump back into the market, and they're going to start buying again because they find price back into that value area in which they initially bought. And when the prices come here and they begin to buy is when it causes the price to go up. So to take advantage of this information, you would start buying here, and you would probably sell once this value area is reached. So you would then sell where other buyers, where other sellers find that it's a good price to sell. These sellers found a good price to sell. That's the reason the price came down. So you would take the advantage of that information, and you would place a buy trade here with an intention to sell here. So that's your first point of selling. The first is when you realize the value is going down, so you're selling here, you're covering it here, and the second point is when you're buying here to sell here again. So these are the two trade opportunities that are presented by the information that we got on this, got by this distribution, by this profile, and the way it was structured. This is the information that can be used to create a trade. The first trade was for selling at B and buying back at D, and then the second trade was buying at D to again sell in an area which is similarly as D, and then you would again get an opportunity to trade when, after being in this value area, like you bought in D, you again get an opportunity to buy at C and try to sell it at a point which is where the sellers were, there were no buyers that were found. So here the sellers became active, and that's where you understand the sellers would be active there, and you would buy at C with the intention to back again sell at the extremity. So this is an example of how trades can be taken by understanding the structure of the volume profile. Let's see some more. Ideas around the volume profile in the next one. Well, this is a repeat of the last structure that we saw. If I can take you back, let me see if I can take you back. I think, yeah, this is the same structure, double distribution. The first point could be to sell at B, hope for it to dip to C, find support at D. So this will act as a support, and this will act as a resistance. So this is where the resistance had, this is where the prices decided to fall down. This acted as a support. The prices took support and went back to this area where you could, buy at D and sell at C, because this is the point of resistance. And as the resistance, is breached and there's a breakout, and when the prices return back to that resistance, which now becomes a support, you can enter again at C and hope to sell it at this point where the acceptance was low. So this is a slide that we already discussed, and we're taking this opportunity to discuss it again. Now this is a different kind of a volume profile that has formed in this context, where you find that within this period you see there are a number of nodes, that high value nodes, that have been created on the same profile. So here the price is basically showing a trend, and the price is not finding a balance and it is showing a trend. This is a small 30-minute time frame on the USD INR, the forex chart, and you see that the price is not finding balance, and there is a sudden drop in price because it could be news based, it could be to do with any regulation, anything that is happening in the market. So this is an intraday profile, and you see that on a 30-minute period this is the price fall that you see, and then return back of that price on the upward direction. There's some spike rate by some news, and then return to mean. So here if you see that there are a number of nodes that have been formed, and how can we take advantage of these nodes then to take trades. So looking at the structure, what are the trades that can come to mind? So if you see this structure, and we see these ledges, how these ledges can act as supports and resistances, and how we can trade using these levels as supports and resistances. So if you see, we began the price here, we caused a ledge, and we dropped down to B, and then again we found some support at level B, and we rose again to an area which is now going to act as a resistance because of this ledge that has been created, and we can short sell here and aim to target B, which is going to be the first trade that we can take. And as you see that the prices fell to B, and they did not stick here on this support, and they began to fall further. You would probably let them fall. After a little fall, once you realize that there is one more ledge that you see here, the ledge has been created by this price action here, and once you see that the prices have fallen but they are returning back to this area where this ledge creation was already created, and then you decide to sell, you understand that this area is a point of resistance, and you begin to sell at this point of resistance and take advantage of this, and you can let it fall to an area where you find a low. Now this ledge is not created at that point of time because this is created by this price action, which is not available for us to see when we are at C. So you sell and you let the prices fall. You book somewhere wherever you find that your risk to reward is good, and you probably book here, and then you find that the prices are going up, and here you see this formation now that this ledge has been created, and then the prices breach this ledge and they go up. Now if you would have got a retracement here back to this support, which is now converted into a resistance, but as the price did not touch back into this area, there were no retest, you may not have bought here. But as the prices went up, this was an area of resistance which was breached by this breakout, and when the prices react back down from this ledge and they come back into this area, given that this was resistance which has turned into a support, we could start an entry here and aim for this ledge which is already created by this price action here, and which was used by us to sell in the first place as your target area. So you buy at D with an intention to sell at G, and then on the way back, when you see that the prices have again broken back down and coming back to area E, which was once a level of support again, you could then wait for the price action to develop, and once the price action gives us a cue that the prices are going higher, you can enter again at E, which was the earlier erstwhile support, and again try to target F, which was in this case a support which was broken, and now it has become a resistance. So you could buy at E with the intention to sell at F. So these are the examples of trades that can be generated given that you understand the volume profile and the ledges that we see on the volume profile. Now these are two examples. One is the double distribution, one of the number of ledges. This is a quadruple distribution, and you see these ledges. So these are two examples of trade setups that can be structured based on what you see as the profile shape that is being created in the market. Now there are 6 or 7 kind of structures that can be formed, and they've been found by traders, and these structures can be traded. So the understanding is that by the volume profile shapes, you can come to understand where the supports and resistances are on the chart, and these support and resistance informations can be used to create setups. So with this we will try to assume that I try to assume that the understanding is that with the different structures, the volume profile can be used to create setups. That's the idea of showing you these two structures. There are more than a number of new structures can be formed, and there are more structures that can be formed. That can be a subject for another video. We should move on this subject, and I hope I've given you an understanding what the volume profile is and how the structures that are formed can be used to make the setups, is what I wanted to convey in the last slide. We'll go to the next one, where we'll take a small quiz, and we'll try to consolidate your understanding of all that we've discussed in the day-to-day. So let's move on to the next one in a bit. Let's get into the quiz section. All the answers that I am asking of you have been explained in this video. Should not be a very difficult answer, but let's take the quiz and see if we've understood. If you haven't understood, this is a video. You can go back and start from the area which you did not understood, develop an understanding, and come back to the quiz again, and probably you'll have the answers. There's no way you cannot have the answer. Anyway, so watch which point is the value area high in this chart. There are 5 points that you see on this chart. I would like you to tell me which is the value area high on this chart, and you have 5 seconds. 1, 2, 3, 4, 5, and here goes. So I hope you have your answer. Well, the answer is A. This is the value area high, this is the value area, and this is the high point of the value area, which is called the value area high. So there you have the answer. I hope you got it right. Not a difficult one. Let's go to quiz 2. What I'm asking here is which point is the VPOC in this chart. VPOC stands for volume profile point of control. So volume point of control is what the VPOC is. So we have 5 options here again, and I'm asking you to give me the point of control on this chart in this particular area and given the volume profile. So I would want you to answer this. You have 5 seconds, and I hope you have the answer. Not a very difficult one again. Let's go to the next slide and get our answers. The answer is, well, you can still guess it. Oh, I think I have skipped a slide, so we'll have to go back. Let me go back. So we have quiz 2, and this is the answer to quiz 2. Point B is the well, there's a highlight which is not the right answer. It's going to confuse you if you have chosen A. The right answer is point B, because point B is the point of control. So point B is what you should be answering. Point B is the point of control, and that should have been your answer. Let's go to quiz 4. What are the ledge areas in this chart? Okay, so what are the ledge areas in this chart? We have had a discussion on ledge areas and how they can be used to create areas of resistances and supports. So I hope you're ready with your answers, and here goes. Quiz 4. Okay, we have a problem here. Quiz 4. The answer to 4 here is here. The ledge areas are area B and area D. So these are the ledge areas that we see. The area B and the area D are 2 ledge areas that have been created. I hope you got this right. So with this, we have completed our understanding of the volume profile. The quiz section was a little up and down here, but these were not difficult questions, and I hope you got the answers right. You can see the video again if you didn't understand the gist of everything that I want to tell you. If I would have gone in more detail, the video would have been even more longer, and that's not the idea. The content has to be small so that you are interested and it doesn't get boring. So I have tried to give you an understanding, but you can always have the option of going back in the video if you are not able to understand it. So introductions to end the video. I'm Manoj Maheshwari. I'm a certified technical analyst with an experience of over 8 years. We run a channel called Market Ideas for Profit, where we present ready curated trade ideas for intraday and swing trades in equity, F&O, and commodity sections. Currently in the Indian market and progressing more now, opening up to the US markets also. And I have a website, www.heymanoj.com, where we post all these trade ideas, and we post all the courses that you see here. And there is a section where for the trade setups, you have to subscribe to a channel, and you get these trade subscription, these setups based on that subscription. The courses are free, and you can access them to get an understanding of how the trade ideas got curated. So basically, the subjects that I cover here are used to create the trade ideas that you see in the area. So you could learn the subject, and then you could subscribe to the trade area section, and you could see the trade setups that have been generated. And generally on the weekends I come and I discuss those trade ideas that I formed, and I discuss the curation process using the same tools that I've given an understanding on in the courses. So we're not charging for the courses, but we want you to come to the trade idea section to understand how the trade idea was conceptualized in the first place. Now, some trade ideas will work and some will not. So everyone that works gives us elation. We're happy about them. The ones that don't work actually help us by trying to understand where we went wrong or what is something that we missed in our understanding curation process. I can make mistakes like anyone can, and I'm probably right 60-65% of the time, not right all the time. Nobody can be right all the time, but it gives us an opportunity to see where we could have gone wrong and why the market broke the structure that we thought would play out. So you could join us in that Telegram channel, and we could take that learning that we've had from the courses to a deeper level, because the courses that I have here are basically just basic examples, basic descriptions of what the tool is, but it requires skill and requires experience over a period of time in using those tools to be able to then find the right setups. So it has developed over a number of years. Like I told you, I've been trading for 8 years, and at certain stages I got introduced to these concepts, and the experiences that I have built on using these concepts are the ones that are helping me trade profitably as of now. And by engaging with you and bringing these subjects to you and building these trade ideas and discussing the curation process, the intention here is to help you get that understanding and save you time. So I took 8 years to get here, probably you could do that in 2 years, is what the advantage is by aligning with with this channel and taking advantage of the experience that I have. So that's the entire idea of engagement. So it's been nice to have spent this time with you, and I hope I have given you an understanding and value for your time. Until the next one, see you, and keep well. Thanks a lot.